So welcome everyone to our weekly COVID-19 update. I hope you're all safe and well. I wish that we were here seeing your faces because this is such a wonderful community of people. But please, in terms of using our Q&A as we go through, start using that now. It's on your Zoom control panel. So this morning we have our panellists and our presenters. So we have Aidan Smith, of course, who is our Head of Not-for-Profits Australasia, Simon James, our Partner Corporate Advisory, and Mariana von Luken, who is our Partner Tax Consulting. So our format will allow our presenters to do their presentations, and then at the end of our presentations, we will have our Q&A. But as I said, I encourage you to put in your questions into our Q&A Zoom control. And I also have some questions here that you've sent through when you registered. So I'd like to now hand it over to Aidan. Thank you.
Thank you, Kim, and good morning all. I hope that you're all well this morning. Now, many of the questions are directed to Mariana in relation to the JobKeeper allowance, and Mariana will be talking about that again later. But I want to just remind you of some of the updates that have happened over the last week or so. I'm not going to go over all the ones we've talked about before, but you might remember that the Assistant Minister for Finance, Charities and Electoral Matters, that's Senator Zed Tisalja, he said a few weeks ago if anyone had any questions to reach out to him. Now that's obviously quite difficult to get hold of a senator, but I just want to remind you, if you are liaising with government departments, which many of you might be through getting grants, etc., reach out to them just to see if there is any financial assistance that you might be able to get in these times. It's the old adage, if you don't know until you try, and the worst they can do is say no. So we think it's worthwhile if you do have any contacts there, just to reach out to them to see if there's any assistance. Now, another thing I just want to remind you all of is that what the ACNC, what's happened in relation to breaches of the governance standards and external conduct standards. Now, the ACNC have come out and said that with certain ones of these, it won't be investigated during the time being, although they have also said that if there's any significant breaches that could harm the public interest, even though this COVID-19 is still happening, they might still investigate, take regulatory action. So the ones where they've come out and said, I'll touch on briefly on those. One is that a charity cannot operate outside its charitable purpose. Now, what the ACNC have said that you don't need to follow that standard anymore, but you still need to align to a purpose and a broad interpretation, or something that's incidental or ancillary to your charitable purposes. Okay, so although it's saying you don't need to, it still has to broadly. And if it wasn't to broadly align with your charitable purpose, you've got to reasonably show that your members would approve of the activity, and document how you believe the new activities would align with charitable purposes, or how they're incidental or ancillary. Okay, so still a few hoops to jump through in relation to that. There's also with the Corps Act, there was an amendment that was done in relation to incurring debts when becoming insolvent, and that related to companies, which covered companies limited by guarantee. Now, a lot of not-for-profits and charities, or charities under the ACNC, aren't companies limited by guarantee. So the ACNC extended that to cover those ones. Again, there's certain conditions that have to be satisfied. It's a debt incurred in the ordinary course of business during the relevant period, which is this period that we're incurring just now, and it's before an appointment of any liquidator or administrator. Okay. Now you have to make sure that any responsible people, which are your directors or again, committee members, etc., are aware of any issue. And you've also got to demonstrate that you've got to inform your members and ACNC if there's any risk that you're going to be trading while insolvent. And the third one that I just want to touch briefly on is the requirement to obtain and keep records for operations outside Australia. As you know, you have to do that, but there could be some obstacles in the way of that just now. So the ACNC have agreed that you don't need to obtain such records, but if you can't, if it's not practical at the moment, but you should be, you've got to record the reasons why that's the case, and then obtain those records as soon as it's practical. Okay, so that's just some things that the ACNC have come out to try and help everyone. But if you do need any assistance with any of those, please reach out to us. Okay, so that's a brief update of what's been happening. And now I'll pass over to Mariana, who's going to talk a bit more about the JobKeeper.
Yes, thank you, Aidan. I was just checking my last-minute emails to see if we've had some news on some of those areas where we've asked questions to the ATO. And we have on one or two, but not the big ones that we really want answers on. So just to recap, again, you're probably overwhelmed and you've heard a lot about the JobKeeper, so I don't want to go into I want to go into the details of the areas where it's most of interest to everyone here. Now, before I jump into JobKeeper, a question that I've been asked quite a few times is on the cash boost. It's not accessible. So the money that you should be getting in April for lodging your BASs, so that 100,000 we're talking about, obviously you don't get 100,000 in April. The maximum you might get in April would be 50. The next 50 comes later. People asking how you show that. If you're not for profit, and I was just talking to Kin and Aidan probably answer this as well. It just really goes in the P&L as a grant, as an income. You're not assessed on it anyway, and it isn't accessible, but you'd show it there. So you don't offset it against expenses or anything. You show it as the income, and that amount is not included in your JobKeeper projections. So that was another question asked. So just to clarify that. So now I'm diving into JobKeeper. So the main things to be aware of is you've had to have eligible employee and eligible employer, eligible employees, and once you've passed eligibility, we can start registering. Now we have until the end of the month, so that's next Thursday. So make sure for you, I know everybody wants to go in and enroll. It's really easy to enroll. It takes you 2 seconds. So really what you really need to do is make sure that you've got that decline in projected turnover. Either decline actually, if you're doing March, and if you're doing April, you probably could be pretty spot on as well because we're on the 23rd of April. So there'd be most of it actual and then the projection. And I know some of you are asking certain questions and I'm going to go through that in a minute, so just hold there. So again, the main thing to be aware of is by the end of the month, the paying of 1,500 per fortnight or top it up at the end of the month. I know it does go into that you've got to have to pay them by fortnight, but you know, they're practical about it. If you pay them monthly or weekly or fortnightly, that's fine. So long as the end of the month, you've paid the minimum of 3,000 per employee. Now I know that's difficult because some of you are thinking, I don't know if I'm eligible and I don't want to top up all these people if I'm not eligible, because then that's money coming out of the bank account that I don't have. Understand that. But again, as I say, you still have time. Eligible employees, I think that's fairly clear right now. It's 1 March. If they started on the 3rd of March, they're not in. They have to be an Australian resident. It's very difficult for some of these students or visa holders that are outside of what is written here. You have to be over 16, so it can't be one of your kids working with you. Full-time, part-time, that's okay. Casuals, I think just reinforce, they've got to be with you for a year and they've got to be in regular systematic employment. And I question what that is, but effectively, you've got to keep a record of it yourself. And, you know, for example, we have someone that's a casual. We call them up when we need them, but if you look at it, they're coming in on a fairly regular basis. Okay, and the other thing is they haven't been nominated by another employer. So I got to ask this question a bit where, you know, they've got 2 employers. Which one do they pick? Well, they can pick either one they like, so long as both employers qualify, that is, or they pick the employer that qualifies. But effectively, that person could be entitled to JobKeeper by one employer and still be getting a salary elsewhere. There's no regulation that says you can't have that. Now remember, this is all accessible, so they're going to pay the tax later. Now, when you pay them a JobKeeper payment, assuming you don't have any other salary and wages, so you've topped it up, you have to take withholding tax out. Now, I say that because if you're already paying them a regular salary, it's business as usual. So past eligibility, what next? So enroll, as I mentioned, and get the nominations. If we go to the next slide, can I do that? Or thank you. So this is really the crucial bit, is understanding the decline in turnover. And I've talked with many of you, maybe not on this call, but many of the not-for-profits. And you know, we've had thrown things around, and I just want to clarify some points, which we haven't got clarification from the ATO, but I'm just going to go back to the legislation and give my thoughts on that. So again, we said it's a basic test or alternative test. Basic test is either monthly or quarterly. You could meet it, being starting from the month of March, which most of you know. Just getting a call, just a second. That was God calling. Now, yep, monthly or quarterly. Now, you can't use the alternative test if you meet the basic test, meaning that you have a comparable period, unless it doesn't make sense. You know, for example, the way they use alternative test is the fact that, you know, there's been droughts, so the comparatives just don't make sense. It wouldn't really be comparable. Or you've started a business and you don't have a comparable. So those are the kind of, indicative, alternative, eligible businesses. But at the moment, we haven't got examples of more. There's nothing there. Now, they said they were bringing out some legislative instrument, meaning rules, law on that, but we haven't seen anything in the Treasury website. And trust me, I look at it daily. That doesn't mean I can't miss it though. Okay, so we're talking about basic turnover test, and what everybody wants to know is, all right, what is my projected GST turnover? Now, if I'm looking at March, I've got my actual. Now, what is my actual? My actual is not necessarily what's in G1 in your BAS, but it's a good starting point. So you look at your taxable supplies that sit in G1, which should be what you did for the month, okay? Because if you're on accruals, that works. And then you look at your GST-free supplies, add them together. You add your donations. At the moment, you would add your bequests, because to me, that would be gifts. And you get your figure. Exclude any input tax, dividends, interest, passive income. And then you would compare the March period. Now, in that period, now this is a simple version, okay? I know that there's many skewed versions of this. And then you compare March. So March, you get your G1, do the same thing. Get your taxable supplies, GST for surprise, and then add your donation bequests and compare the two. Have you had a drop of 15% or more if you're an ACNC registered entity? If you're a not-for-profit but not ACNC registered, then you look at 30%. Okay, yes, you say I have. Go no further. You are now within the rules. Go and enroll and send out your nomination forms if you already haven't done that, and wait for those. And then there'll be more to come. That's a simple version. The more complex version is, okay, what happens if I get a grant in April and the grant relates to 12 months? For accounting, you know, I spread it, but for my purposes of my BAS, I would normally include it in my April, if I'm monthly, for example, in my monthly BAS. Do I include that as projected? Now, obviously, you've received it, it's April, so you would include it. Now, and the thinking is, do we spread it? At the moment, according to what the projected GST turnover says, it's what a reasonable person would expect. So it says here that the current GST, where is it? Is that a reasonable person could be expected to arrive at having regards to the facts and circumstances which apply to your enterprise at the relevant time. So looking at, would they have known they were going to receive it? Well, they received it, so yes. So I would include it, not knowing any different, in the month of April. Now, if I included in April the grant, did I get a corresponding grant in April 2019? If you did, you can compare like to like. If you didn't, then you're going to be higher this year and that's not going to help you. Now, put it the other way around. Say, for example, you got the grant in 2019 April, but you didn't get it in 2020 April. Now, that could have been because of COVID, could have been just chance. You didn't get it that month and you're not projecting it for that month of April. Then I would still think that you would effectively, you could use that because that is actual. So you've actually received that grant in, it's valid. It's basically part of your GST definition. So hence why I say, I know we've thrown around a few ideas or thoughts. Another unusual one, maybe for not a lot of you here on the call, but another unusual one to keep in mind is, say, memberships, if it's all received in 1 year in June, or say a January period, what do you do then? Well, then maybe that's a little bit harder to compare, and maybe that alternative method needs to be used, but we don't know what that is yet. So just to confirm, we have reached out to the ATO. We've asked them questions. They were sent out on Monday, sending it out in a different format today again, just phrasing it differently. And we're waiting for them. Now, I think something will come out by Friday at the latest. And we'll have some more information. And then when we have that, we can certainly probably put on a seminar earlier if need be, or like on Monday, or just get in touch with clients that have asked us the question. So I've talked about the alternative test. I talked about what projected turnover is. It includes your taxable supplies. So any money effectively you received or you think you're going to receive, your GST-free supplies, and supplies between members of GST group. Now, what's interesting is advance payments, NDIS payments, whether there's GST on those, if they're a supply as such. Because remember, it comes under the definition of GST. So we're getting confirmation from the ATO on that, and hence why they've probably said there's more information to come. Now, for those on the call, do you think you are entitled to JobKeeper? So maybe that's a poll question.
I've just launched the poll for you, Mariana.
Thank you. And some of you may not be sure because you're still waiting on that further information. But remember what I said is that if you don't meet it in March, you can try for April. And if you don't meet it in April, try for the quarter April to June. If you don't meet it, then try for May. And then if you don't meet it, try for June. So once you meet it, so if you meet it for June, you start getting the JobKeeper payment. You enroll and start getting it in June. Okay, but obviously the payment will be given to you a month in arrears, so you get it in July, the cash. But you could enroll for May itself June, once you qualify. So very important, and you're not reassessing. All right, so if we move on to the next slide. And I have to say, we're trying to reach out to everyone. If we haven't reached out to you, please don't take that we're ignoring you. I just think send us another email to say, to remind us. I just think, I think I've been able to respond to everyone, but at the same time, it is a little bit, there is a lot coming in. So assistance, we are assisting clients with eligibility for employer, with eligibility for employees, sole traders, that doesn't apply to anyone here. Assistance with calculation of decline in projected turnover. You don't want to get that wrong. I don't know the answer to the fact of, say for example, you do your projections, you've got everything to support your projections, you've done everything correctly as an organisation, but suddenly something unexpected happens and you actually end up in a higher turnover, which can happen for not-for-profits, like say a bequeathment or something happens. I think in that case, if it's a bequeathment, you really wouldn't have known, right? You could not have estimated that. I think then the question becomes, how is the ATO going to treat it? Do we go back to them and say to them, look, these are my up front, because the legislation is clear that, it is unprojected. And if you get it wrong, there potentially can be penalties. But again, it'll be at the Commissioner's discretion. If you can support why you've done your claim, then you shouldn't be penalised for it. And just going on, I think there were some questions on employee nominations. So I'm going to go through that in a minute. Online enrolments are open by the 30th of April. You can enrol later than the 30th of April, by the way. But if you want to get that payment as soon as possible, obviously you want to try to get that in as about the 30th of April. What I'm getting at is, if you got everything sort of aligned, but you couldn't do the enrolment until 1 May, I don't think is going to be a problem. or even to the 5th of May. So it's opened in May. It's just that you want to, I think they're going to pay the JobKeeper by the sort of 14th of May. So that's why you want to have your enrolment in. So employee nominations. So they're not required to be lodged with anyone. They're really just required to be kept on your records and send a copy to your agent if they're helping you with anything. Now, you don't need to send it to your tax agent unless they're already helping you with the JobKeeper. Now, with the nominations, the ATO has a pro forma and you send it out, and it may be difficult for some employees to sign it because they're on annual leave. That's okay. So the ATO says that what you can do is make up your own pro forma. And in the ATO website, they have, an example of what a pro forma should look like. So you can send it and get your staff members to reply. So you could send the ATO one and get them to reply by email saying, yep, they've accepted that, and then send you the signed copy later. Or you can just invent your own form and send it to them, in an Excel spreadsheet or something, and just get them to write their name and then email and sign it. So they're pretty flexible with that. And if you don't have it by the end of June, you can still get the JobKeeper. Sorry, end of April, you can still get the JobKeeper. Okay, yeah, I thought I took that one out, so that's not needed. Projected monthly declaration forms must be submitted to the ATO. So there will be, once you're in the JobKeeper, there is obligations to still maintain. So one of it is there's monthly projections of who's eligible employees. And how are we going to do that? It's going to be on single touch payroll. So there's something that's come out, this thing here, which I think I'm going to get Kim to send it to you, so you'll have a copy of it. But basically, it's basically going to be that you have to have your SPT, if you like. If you're on single touch payroll, you should be checking with your software providers to ensure that you have the capability. It's been upgraded for the capability for JobKeeper. That is the simplest thing, and I think you should get on to that now. If you use Xero, they will be upgrading for that, and if not already upgraded. So if your software provider has the capability for your single touch payroll provider has the capability for JobKeeper, then all you have to do is by 30th of April is update it. Okay, and by updating it, what does it mean? It means that I don't know if there's a specific click a button, but you can go and have a look yourself. But one thing I do know is that if you had, say, someone that was stood down and you're paying them $1,500, so it's all a top up, so it's all JobKeeper. Then there is a separate line in the single touch payroll to sort of indicate that is a top up. Or say you're paying someone $1,000 and you're topping them up by $500 less the withholding tax, then there's a separate line for the JobKeeper top up. So that's what's going to show in your payment summary. And my understanding is that if you're just normally paying your staff as normal, then you don't have to do anything. And the only reason why you're checking that on a monthly basis and by the end of 30th of April is to make sure all your employees are on there. So any employee that's resigned, that's no longer an employee, is not on there because you're not going to want them to be paying for that employee. Because
Ariana, could I just interrupt you just for a moment? One of our participants would like clarification on something. So in terms of getting nomination forms signed by staff on annual leave, per the ATO form, they don't need to physically sign. Email is fine?
Yep. And what I'd do is I'd get email, so email them back, and then when they're back in the office, just get a signed version to put with it, because only for your records, remember that. So as I was saying, if you're on single touch payroll and your provider has upgraded for JobKeeper, that is the simplest form, easy to do. If you're not, then there's a rule about under 200 employees or over, then you have to go through your business portal and upload a form and complete that. Okay, so I would say check with your providers because that is going to be the easiest thing. So that's going to be on a monthly basis once you're in the JobKeeper. And what the ATO is requiring also on a monthly, which will come out around this, it'll be for the 7th of May, probably through the portal, the business portal. It'll ask you for what your actual turnover was for April, for example, or March, depending which one you put it in. And then what your projected turnover is for May, projected. And there I would project it, I would put in what grants you're going to receive, you know, anything that's happening in that month. GST-free supplies, but not input tax supplies, any donations you expect, bequeathments, anything like that. Now, this is not a retest, it's simply providing information to them for the purposes of COVID. I think they're the questions, before I go to your questions, that they're the ones that I think were the most common ones. If I'm just going to put a poll before we go to questions and answers, do you need assistance with the registration, including projected GST turnover? So if we bring that poll up, and Kim will look at that.
Launch the poll, Mariana.
Thank you. Just give you a few seconds to complete that. Okay, we should go to questions and answers. Oh, one more thing before we go to questions and answers, two more things. There has been 2 grants being, Kim's going to send you the information, but there are 2 grants that are available. One from City of Sydney, and it doesn't really have a turnover drop or anything like that. You'll have to have a look at it in more detail, but it's for $10,000, and you have to be obviously in the City of Sydney. And it's effectively closes on the Monday the 27th, okay? And the other one is from Sydney, New South Wales, basically just one of those government grants of 10,000. You have 1 to 19 employees, your turnover is over 75,000, and you've had a drop of more than 75%. So maybe not everyone on this call, but it is $10,000 and it is available. So you might know some other people that might benefit from it or other businesses. And that's open till the 1st of June. So it's quite specific, that one. That's New South Wales, but the links will be sent to you by Kim. So Kim, maybe we can take the poll down and go to the questions and answers.
Yes. So Aidan, would you like to open our Q&A session? Thank you.
Yes, thanks Kim, thanks Mariana. We've got the Q&A box at the bottom of your screen, which Kim mentioned earlier. So if you do have any questions, please type those in and we'll endeavour to answer them. The first one I'll go through and answer. Someone's asked the best practice for accounting for the JobKeeper payment. Should it be used to offset the salary cost and expenses, which is the intention of the policy, and also about the 100,000 cash flow boost? Is government grant be the best place? Mariana touched about this earlier. They both will go to revenue item in your profit and loss account. It will be a government grant, or you could show it as a JobKeeper payment if you wanted to show it separately. But because the salary cost is still your expense, that has to be shown in expense, and then the income part has to be shown in the income revenue line as well. Okay, so that's that question I answered. I think the rest of the questions, Mariana, are going to be for you. Given you've given 99% of the presentation, so myself and Simon will go through these and ask you these.
Okay, and sorry, don't get jealous. It's not a jealous type.
The first one to you,
yep.
Is there a need to submit information on eligible employees via STP, like single touch payroll, by the 30th of April? And what if you're still going through the nomination form confirmation process?
Yeah, so you do need to do it by the 30th. I think you should have your nominations in by then. I think your employees will be very interested in this. It'd be unusual. But you probably assessed a lot of your employees already. It's just the doubtful ones. But yes, you've got to the 30th of April. If you're on STP, that your provider has the JobKeeper facility. If you're not, you'll have till the 4th of May. You can't do it because you'll have access to the portal then. There'll be a form in the portal from the 4th of May, not sooner than that.
Okay, Mariana, next question. In the MyGov ID, ATO requires the employer to select March 20 or April 20. The question is, can you use your quarterly BAS from January to March against the quarterly BAS January to March in the prior year?
No. So the legislation is clear.
Be the month.
Yeah, so the legislation is clear. So I know that it does say you can choose only month, but I've been told, and I haven't seen it, but if you choose April, at the bottom there's a little black print that says you can choose April if you're going to use the quarter April to June. Okay, so choose April if you're using a quarter. You can't choose January to March. So the legislation is clear in the regs as well, regulations, is that it's only March. And it was unusual March was there. We were a bit surprised about that because it starts at 30th of March, but you can use March, but you can't choose that quarter.
Okay. The next question is in relation to turnover test for not-for-profits. So this not-for-profits and donations dropped significantly, but they've been selling, I think, books, they're selling 2 instead of 1, so it's like the sales have doubled. So the GST turnover has jumped significantly, and that basis would not qualify. So it's just confirmation that is the case. If your turnover was to increase, then you wouldn't qualify.
Well, that's right. I mean, you know, it's based on, so you've really got March and April for actuals to give you a really good indication. So your donations would have dropped, but it takes the whole entity's income. So it takes the employer. So if you're looking at one particular employer and you have sales, you have donations, you have other suppliers, grants, you bundle it all together as the income per what you have to do on your GST. So the answer would be yes, you wouldn't qualify for that particular month. But I wouldn't say you wouldn't qualify for April to June quarter. So I test different periods. And if you don't qualify, keep testing until you do in another month.
Next question is a good one. I kind of like this one. Turnover did decrease by more than 15% March compared to March last year, but due to the change in the accounting method of the amortization of grants, it doesn't. So does the method qualify, the changing method qualify for the decrease in turnover? So this is I suppose the question around where we've got kind of unusual and new accounting practices of turnover. How can we best unpick it to come up with a methodology that works? And
this is the interesting question, right? And currently projected GST turnover is based on what you project, right? So if what you know it to be. Now, if you're basing it on actuals, which if you're looking at March and April, you're probably basing it on actuals. It's what you actually receive. So look at what your G1 includes and have you got GST taxable supplies? That would be probably the best place to start. I know that in other words, if you received a grant in April, I would put that in as a grant in April for the moment, because that is actually what I've received. That's what you normally would be, if it's had GST on it, you'd be including that in your BAS, my understanding would be, for that if you were, say, monthly for
Correct.
April.
I think this is one of those where the devil's in the detail.
Yeah, there's not
send through
that
the
much
information
detail.
and let's have a look at it.
Well, there's not that much detail. The reality of it is it's going by the GST rules, not by accounting. Okay, so that's very clear. Now, say for example, you account for something on cash in your BAS on a quarterly basis. You can use accruals and you can use cash. So it doesn't go by attribution alone. What you need to do is be able to support why you've done it the way you have. Now, if you're a BAS lodger on cash, well, that's why. But if you're a quarterly lodger and you do it on cash, why did you do that? You know, that's probably a little bit harder to understand. There might have been a good reason, but what is that reason? And we don't have enough information yet. Sorry, go on.
Okay, your next question. So, when applying for this JobKeeper payment, what if you've got a holding company and then you've got a subsidiary and they both have separate ABNs? Can they be treated as 2 separate employers, or is it the one?
Well, I would ask where your employees are, because this is based on the employer. So it doesn't look at consolidated groups, GST groups. It doesn't look at ABN as such. Obviously, it's ABN, you have to have it as an employer, but it looks at who has the PAYG withholding, because that's key. So in that case, I would probably say the subsidiary has the employees. Now, another interesting question is that what happens if the service entity has the employees, which is the case with some of the groups. And what we're asked that question. And at the moment, service entities don't seem to fit in within the category. So unless they've had a drop. And how do you have a drop with a service entity when it's usually a reimbursement of employee cost plus a percentage, which is normally not a massive 10, 15. What do you normally see the percentage to be, Aidan or Simon?
It depends on the entity, but yes, from what you're saying anyway, no matter what it is, you're not going to have that drop in turnover because it's just based on your
unless you got
salary
rid of employees and that.
Yes.
So that's a hard one. But again, look at who is the employer.
Excellent. Next question. I know the answer to this one, but I'll let you answer it, Mariana. So if you're eligible for JobKeeper in April, but then revenue jumps up in May and maybe June, are you still eligible for JobKeeper?
Yes, yes. So this is a question right at the beginning. We asked how would you have to test every month, and that would make sense. So they've made it that you only test once because it's too hard to undo the program. So once you're in, you're in. You get it for the 6 months. And I think the government acknowledges that it might be good and bad in there, but the reality is it keeps the economy going.
Okay, next question. This is JobKeeper and Job Seeker, both right, but obviously two very different different programs. So if you've got an employee and they're also getting Job Seeker from Centrelink, do you remove this employee from when you're making an application to the ATO so that you can't double dip? Or is it whose responsibility is it? Is it the employee that informs Centrelink?
Yeah, so the employer has to inform Centrelink.
Okay.
And they're telling you that they're notifying you that they're getting JobKeeper. I just don't know what happens. I guess is when they're eligible employees. So it's a practical question more than anything else, in the sense that some people would have already got JobSeeker. So they would have got it in the month of April. So they have to notify the government, Services Australia or Centrelink, that they're now on JobKeeper, so they stop getting it. And so maybe there's some adjustment to the payroll that has to be made, so it can be identified that they got the job seeker. So I'm not really sure how that will work practically. So maybe that's one we can confirm for you.
Okay.
I've got your name, so. Do you know, Aidan, what organisation? We've got that information.
Yeah, we've got the information, yeah.
Yeah, so let me confirm that, because it isn't, I have had a similar question, which I just had yesterday, so I haven't had time to go back and have a look at it, because one of the questions is, can I choose which ones are in? And the answer is no, they're all in. The employee almost chooses if they're out by either being with another employer on the JobKeeper, or you've already determined they're not eligible. So I think somebody said they had a few people they didn't want to give them JobKeeper. I think because of the fact they had to do the top up in April, so they wouldn't have the cash. So my answer would be the banks are funding, the payment of payroll because they know that the JobKeeper will be coming, so you can guarantee it. And it could be very quickly done. So I would just recommend, if you need some help on that for the funding side, is to go to our debt advisory. Again, reach out to Aidan or any of us, Kim, and we can put you on to Betty or James. If you need a bit of cash, in the next few days, in order to, and I don't know how quickly they can organise it, but it's worth asking.
Good question coming through next. As an aged care and disability services organisation, the funding for a lot of the programme is GST free. JobKeeper is based on GST, which is quite low compared to the total revenue of the organisation.
So they're funded by programs that are GST free. Yeah. So effectively, the revenue you're saying is a GST free supply. So with the projected turnover, it's taxable supplies or GST free supplies that are included. So if it's a GST free supply, then say for example, I'm a dentist and I sell services, and that's GST free, that would be, the sales would be included in my calculations.
Yep, so it's GST or GST free, but it's still the supplies
Yeah.
that we're comparing
Yeah.
on a consistent basis.
If it's not a taxable supply or not a GST free supply, then it may not be coming into the area. And this is something we've been talking with our GST expert is, and this is why we need clarification, is because, you know, there are some grants, maybe there's no GST on them and they're not GST free either. So, you know, would you say you don't include them because they don't fit the criteria? But again, I would look at how do you do your BAS normally. If you include them as taxable supplies, grants, you know, that have GST in them, or you include them as GST-free supplies, then you would include them in your calculation. That's the safest way.
Okay, thank you. The next question, just confirming something that I think you said in your presentation. So if you don't have the decline now, so you're not below the 15%, but you're not sure for the future, but there's a good chance that there will be a lot of cancellations and this organisation services, you can make that claim in the future.
Yeah, Rosie, that's a really good question, because the interesting thing about that is that, you know, you don't really know what the decline is going to be. You can start seeing it. I just wonder if you can project it, because, you know, obviously you don't meet it for April. That's what you're telling me here. But what about April to June? If you did a projection, if you're already getting cancellations, you know, I'm not sure what services you're in, but, you know, could you ring some of these people to sort of see if they're going to cancel and start, you know, getting a bit of backup? So, you know, projections are projections. So that's why I'm saying to you, you know, if you've done a really good stab at it, get into the program, you know, start getting the money. Now, if you're really unsure and you've done all your research, the other way you can do it is wait till May and retest in May. So, and now again, it's projected. So if you say you project for May and you think you're in May, you can log in and enroll from May onwards.
Okay, I think that's answering this next question as well, to be honest. This the question was, we don't meet the turnover test for April, but we might in the April quarter. So that's exactly what you're saying again there for the projection.
Yeah. Look, I think you need to do projections. You need to have a very good stab at it, and you know your business better than anyone. If you need assistance, we can be sounding boards to go through. You know, Simon's got a lot of experience in that, Aidan, myself, and ask the questions. You know, there's ways that you can really do. You can try to get a projection in there.
Okay, now the next question might be me. There we go. I'll better start put my thinking hat on. So I talked about earlier. This is it's a good question, not a good question, about when the JobKeeper comes in, it's showing as income. But the question is, what if you're paying a top up? So the JobKeeper, you get the 1,500 per fortnight, but an employee might just be paid 1,000 per fortnight, but you've got to pass on that 1,500 to them. So the question is, it doesn't seem right if you've got to show higher costs and income than you normally would, because you'd normally show 1,000 per fortnight as cost, and now what you'd be showing is 1,500 per fortnight and then 1,500 income. That's a good question, Jackie. My feeling is that it would still have to be shown as income and expense, because it is still an expense. It's a top up, but that employee could be doing, it doesn't need to do additional work for that. We'll look into it just to confirm. I think it is a good question. It doesn't seem like your expenses go up. Are still getting the income as
so no, they wouldn't be. So I think, Aidan, just to clarify, I think.
Oh, okay, I'll take it back.
Sorry, just to clarify, Aidan, I think what happens is, I know what happens is that you have to pay them minimum of 1,500. So that means if you already pay them 1,000, all you do is top up by 500.
Yes. So
yeah. So you get a grant of 1,500.
Yes, but the question is, do you show? You'd only normally pay them 1,000, but now you're paying them 1,500. So the question is whether you're showing an inflated expense item. My feeling is that you would, but we'll confirm that.
Yeah, no, you would. I mean, it's the minimum you have to pay is 15. Yeah. So say they're stood down and you're not paying them anything. Yeah. Under these rules, you have to pay them 1,500 or 3,000 for the month. You'll get that money back in May. So yes, it's an offset. Effectively, you're acting a bit like a Centrelink, I would say, because you're really just paying them the unemployment benefit, but under the JobKeeper, in a sense.
Yeah, accounting for it, yeah.
Yeah, you're
Okay.
accounting for it that way. And then I think on the single touch payroll, it'll show, they'll have a separate line saying that's the top up. So the whole 1,500 will be part of JobKeeper top up. So that's how the government will know. Now remember, if you're already paying 1,000 and you pay them 500, the top up is only 500. If you're already paying them 1,500 a fortnight, you don't have anything showing it's normal. So you just show them as normal salary and wages.
Next one's not a question, but it's a statement from Mark, but it's a good one.
Oh yeah,
I think.
good. Yeah, good, Mark.
Hi Mariana, the NDIA has confirmed with Treasury and the ATO that the advance payments made by NDIA are not included in the JobKeeper turnover test for providers.
Okay, so the advance payment will not be treated as input taxed loans, and they should be excluded from GST turnover. The GST turnover test only includes suppliers that have or likely to be made in the test period, and the advance payments are for suppliers that will be made in later period. Believes that this provides you clarity in regards to the intersection of the advance payments and claims you make, JobKeeper. I wonder if that's only for NDIA, is it? Is that
Correct.
right?
NDIA advance payments, effectively saying if you do get an advance payment from NDIA, then you ignore it from the turnover test.
Fantastic.
Because obviously
Great
that's a boost, so that's good.
This is like live coming to you. I love it. And I assume, can I just ask a question, Mark? The NDIA payment, do you have GST on that normally? Would you normally show that in your BAS? If you could just let me know. And you've said here, we've received the above from the NDIA today around treating prepayment. Okay, sorry, yeah. So is that only for prepayment? So if it's received in advance, and is it most cases you receive it in advance? The NDIA? Do you know that, Aidan?
Often it depends on the organisation, but yes,
Yeah.
I've come across many where the money does come in advance.
Because I wonder whether the grants, it's the same treatment, because grants are in advance, really, in a sense. We have to use them for a period. There's milestones. We haven't got anything back from grants. But I'd be interested to know if this advance payment, you do show it in your BAS normally, and if there's GST in it. I assume there's been no GST. And it would tell me that you normally wouldn't include this in your BAS. So I'll talk to you, Mark, later. Thank you.
Okay. Next question is in relation to timing. So donations. So if a donation, so you've got a donor who makes a large donation, and last year it was made in March 19, and this year it was made in January 20. So there's been a large, when you look at the period of March, there's been a large decline because the corresponding donation that was received this year was received in January instead of March. So just because of the timing of it, can you still use the March this year versus last year when you're
there's no reason not to. It's basically what's in your BAS at the time. Yeah.
Okay, excellent.
I mean, there's nothing there that indicates that you have to align.
Yep.
Your donors or anything like that. That'd be way too sophisticated, I think.
Easy one. If you're
He's only projected and
if you're entitled till June, do you have to complete the employee enrolments by 30th of April, or can you complete when you become eligible?
So what was the first bit?
If you only become entitled to JobKeeper in June,
oh right,
do you have to complete the forms by 30th of April, or do you have to just complete
No, you're only complete when you're nominating your employees. So you would complete that at the beginning of the quarter. So you're effectively in the first fortnight of May or June, first fortnight of June, which I think is on the, I don't know what it is. I thought I had it here, but no, I don't. First fortnight of June, then you would actually indicate there that effectively you're enrolling, and then you would nominate. So it's only once you meet the criteria. And you don't get it going backwards. You only get it from the time that you qualify. So in June onwards.
Okay. Next one is, so an employee pays their salary into super, I'm assuming that's salary sacrifice, so they actually get no gross taxable pay in their pay slip. So is this employee still eligible for the JobKeeper payment?
Yeah, I mean, yes, because I think it's part of salary and wages. So this is allowance, effectively. This is salary sacrifice amounts, yes, for the tax exempt entities.
Next
And you'd
question.
show it as normal.
Sorry, Mariana. Next question is it only on projected income, or can it be actual? It can be actual, but the question here actually says, i.e. March 19 quarter versus March 20 quarter.
Well, it has to be on actual because that's past.
But
So,
it can't be a quarter for
oh,
March
sorry,
20.
quarter, yeah.
It can only be a month if you're doing March, is that correct?
Yes, that's right. So I think maybe it's a typo there, but you can't have a March quarter, you can only have a March. So just take out quarter and just visualize March. March 2019 and March 2020, but it has to be actual because we're now in April. So that's why I'm saying April you can pretty much do an actual as well and just a couple of days projection.
Okay, so you've got an employee and you're entitled to the 1,500 per fortnight. So the employee is getting that, and then that person resigns. So what's the process then? Do you have to repay money to the ATO? When do you inform the ATO?
Yeah, so that's why you're doing this at the end of each fortnight. You're checking your SPT to see if you have the same employees. So effectively your pay run. So you're only going to get it. So that's why they do fortnight for their own purposes to administer this. But if you visualize it, you pay someone in a month, wherever the month falls. But if the fortnight, you might get it for the first fortnight and they resigned within the first fortnight or after the first fortnight, you only get it for the first fortnight. And then after that, you wouldn't get the job seeker. And how would you identify that? You'd show it in your single touch payroll. So there'd be a form, there'd be a way to identify the date they left. So then JobKeeper will only pay you up to that time. So you might get one fortnight, and then a couple of days. So they'll average it out.
Yeah, you're typically paying the person before you get the money off the government anyway. Yeah.
That's right. I mean, the first month is you don't have the cash flow. The second one, well, you've got it from the month of May. So, you know, it's sort of kind of catching up there, but you're using the government money in May effectively. But that's right. You would still pay them as normal in that case if you knew they were going to resign, because usually they give you 4 weeks notice. Unless, you know, they just did something really bad and you told them leave now. But then you would be paying them up to that date. And then you would just go, I think whenever you have something like that, I would just recommend going into single touch payroll and updating the records there.
Another question just on when to register. So it's looking like June to register, but do a register before 30th of April or register at a later date?
No, you only enroll when you qualify, because in the enrollment form, it's really simple, but it asks you what month you qualify, and then it'll go through and ask you how many employees and so on. But you only need to enroll when you're going to qualify for it.
But just to clarify on that point, if you do think you're going to get there in June, I'd have a look at the April to June quarter, because if you can get there in the quarter, then you can be receiving the payments for April and May if you do it over the quarter basis.
Correct. I agree with that.
Okay, here's another one that's related to timing. So if you pass the turnover test, so there's a decline of 15% in March, but then come June, a large donation comes in, and that means that your June income versus last year is significantly higher. So you'd fail June if you looked at June on its own. The understanding is that wouldn't affect JobKeeper because it was okay in March, and that's when the application was made, even though you'd fail it if you're doing it separately for the month of June. Is that correct? That's
right. We're not retesting every month. So once we qualify, and that's very clear in the legislation. And as I say, you still have to record and you have to provide all this information to the ATO because you'll do it on a monthly basis. But no, I think they've tried to make it easy in a sense. If you qualify, you just start from the beginning. If you qualify a little bit later, you just start from there. So yes, it doesn't matter. And I would question as well, say for example, you predicted in April to June, you were going to have a reduction in turnover, and you got a bequest you didn't expect, and suddenly, you know, you don't qualify. I still think that in my mind, and that's what I'd like some backing on from the ATO, is that they're not necessarily going to penalise you for that. Whether you have to repay it, another question. But I don't think they would penalise you, because if you've done your projections to the best of your ability and you've got a record of how you've done it, you're not trying to, you know, defraud the system or anything like that. The question is whether at that point in time, if you got a big bequest, you would notify the ATO and you would stop getting JobKeeper going forward. You know, so that might be more of a moral responsibility than anything, than a requirement. But that's, you know, something along the line we can get more clarification on. But at this stage, once you're in, you're in, and even if you don't qualify, if you've, you know, say you've tested March, you qualify, you're in, so you're fine.
Yep.
Another question from Jackie. Hi, Jackie. What about the top-up payments? Will that increase my costs?
They definitely will increase your cost.
Will, but
for
at least
April.
you're getting funded for it.
For April, but you're getting funded for it as a what is your name? Simon. Simon says. So Simon says. Now, yeah. So it is an extra cost, definitely. But again, as I say, it's only April that it's the extra cost because from a cash flow. So if you didn't pay someone $1,500 a fortnight and now you have to pay them that by the end of April, it is going to be a cost to your business, but you'll get that money back in May, by the 14th of May.
Okay. Next one's clarifying, I think you said earlier, Mariana. So you're comparing March. If you're looking at actuals, you're comparing March 19 to March 20.
Yeah, and the question is, what are you comparing? What's your revenue, the downturn? So what did you conclude in those figures, as we discussed before?
Yep.
Can we use JobKeeper allowance to cover the FBT component of salary?
You can do anything we like with it once you got it, so long as you paid the minimum salary. That's what it's there for. So it's there to pay your employees. Now, if you want to top up your employees and pay them more, go ahead. But that's not the intention of it, but no one's saying you can't do that. So long as you meet all the criteria, it's, you know, the only requirement is that it's accessible anyway. The only requirement is that you meet the eligibility at time of enrolment. Yes, so you can use it for other things.
Okay, so what if, despite employer chasing up an employee to return the form, the employee doesn't return it? Does that mean you can't claim the JobKeeper for the first 2 fortnights if they haven't returned the form then?
No, Jackie, I think we covered that. I think you probably wrote that after we sort of, or before we answered that. But yeah, so as we indicated, no, so long as you sent the form, you got confirmation from the employee, that's fine. And you can make your own form up.
I just wanted to tell you that we've just hit the 10 o'clock mark. So if the panelist and the attendees are happy, we could run for, say, another 10 minutes and then close at 10 past 10. Is that suitable to everyone?
Yeah.
Yes? Okay. Thank you.
If we qualify for JobKeeper payment, will there be subsequent tests? If so, we're not qualified, hence no payment from the ATO. But I think once you're in, you're in. Is that correct, Mariana?
That's right.
One test.
There's nothing more on that. Once you're in, you're in. You will have to notify the ATO of what your actual and projections are every month. Yep.
Okay.
Okay,
asking clarification in the previous question. So asking, does the 15% decline in turnover have to be due to COVID-19?
No.
So can it be due to a change in accounting method? It's because the new accounting standards, where it might change the way revenue is recognised. So last year it will be shown, revenue will be shown one way, and this year it's shown another.
How do you recognise it in your BAS? I would go back to how do you
Okay.
recognise it in your business activity statement, because it's based on GST, so not on an accounting principles. And again, if you're doing projections, it's based on more about what's the taxable supply, when this is a supply made, when was a sale made.
Yeah, I think if you've got any specifics on this revenue, it's worth either ourselves or somebody else to have a look at it, just to kind of clarify.
Okay, this yep, great. Agency has made an advance payment to you over the course of the past 4 weeks. A number of providers who have received the advance payment have raised concerns regarding JobKeeper. Confirmed with Treasury are not included in the JobKeeper turnover test for providers. It will not be treated as input tax or loans. We went through that, and they believe that this provides you with clarity regarding the okay. Oh, that's okay. Thank you. So they've sent that. I just wanted to know whether that, Richard, whether that advance payment of NDIA, you would have GST in it normally, or would you normally include it in your business activity statement? If you could answer that for me, that'd be great.
All right, the next one is.
Go on, Ed,
go
after you.
All right. A granted donation from overseas. So granted donation from overseas input tax supply. Is it an input tax supply or a GST for supply? So it's a grant or donation from overseas.
Yeah, I think normally it wouldn't even come within both, so it's not a supply. But what the under these JobKeeper, they're considered a supply. So you include it in your calculations. A donation's a donation.
Next one. Can you add employees post-registration and acceptance of eligibility as an NFP? For example, if I did not top up those employees this month, but will do next month, knowing that I'm eligible for JobKeeper.
I don't know the answer to that, to be honest with you. I would say they're eligible this month. The only reason you're not doing it is because of cash flow. And there's clear commentary on that says if you don't have the money, go to the banks and get it, and the banks will guarantee it. So to me, it sounds a bit odd, but that's something I can confirm with the ATO. So we've got this question, Kim, we can
ask
the ATO that question.
It might be worth claiming it and then actually making a kind of back payment to top them up, the fact that they've only received it a little bit later.
Yeah, look, I think that if you hadn't topped them up in the month of April by the end of it, I mean, I would definitely do it. But if, say, for example, you couldn't top them up for some reason, not because you're waiting for the May cash payment, but for whatever reason you did it on 1 May, I think you'd be okay. But, you know, again, it's an unknown.
Next question, I think, is an accounting question. Can you put the top up in a JobKeeper top up wages and salaries expense? So you can still compare year-on-year actual wages. So I think this is in your trial balance. Your trial balance, you can create another account if you want. As Mariana said earlier, you just got to be careful when the top up, you're still paying the tax. You got to pay the PAYG on that. But if you wanted to separate it, and for your stat accounts, you can show separate categories if you want. So as far as accounting for it, you can do those if that's your preference.
Another good question. We've got an employee that will start the government paid parental leave in May. We've claimed JobKeeper for her in April. How do you communicate to the ATO that she won't be eligible for JobKeeper in May?
Just a second. Just had to write something.
How do you turn an employee off for JobKeeper going forward? I think it's in the payroll system. You can kind of click it month by month. Can you not?
Yeah, so you're notifying them every month.
Yep.
So you can certainly, with your single touch payroll or the manual way, whichever one you're choosing to use, you can notify them so it clicks off, because if they're on the government paid parental, they won't get JobKeeper. Yep.
The ones I've looked at so far is literally off and on, so you turn them off and on.
Yeah, thanks for that. We pay us fortnightly, but the fortnight doesn't line up. That's okay, so long as you can have your own pay system, so long as you pay the minimum, which is the 3,000 in the month for those employees that wouldn't normally get 3,000. If they're already getting more than 3,000, don't worry about it.
You say, Mariana, you say 3,000. Is it not 3,250?
Well, you can choose. You can choose to be, if you're paying on a fortnightly basis. If you're paying on a monthly basis, you might aggregate it for the month. So taking the last few days a month. So yes, you can do it. It all washes out in the end.
As long as you're getting
Because
a
they're
paid
only
at
going to
least
pay you. They're only going to pay you the 3,000 anyway. You know what I mean? So you can choose, because it'll all line up by the time you go through it.
Okay. Next one's look at the ATO, the FAQ section there. So it says that employers need to refund a portion of JobKeeper back for employees that have left the organisation. This question is just to clarify that if you've claimed, this is only for the JobKeeper for the fortnight that they ceased working, not prior periods.
Yeah, that's right. That's correct. I mean, it's only if you haven't notified them, you haven't updated your single touch payroll, and they've left, and you've left it for a week or two before you got the money.
Yep.
Turn this off. Can you please summarise which employees entitled JobKeeper payments? So just in terms of employees who are entitled to JobKeeper payments.
So ineligible employees aren't entitled to it. That's the difference. So ineligible is if they're under 16, they're not Australian citizens, so they might be on a visa holder, it might be students, something along those lines. They're not included. They weren't employed at 1 March. There's a whole list of them in the ATO website, but that gives you the general idea. They're casuals which don't meet the criteria of having been with you for a year, and they haven't had the regular and systematic employment over that year, just for the casuals. So that's what wouldn't qualify as eligible employee. Otherwise, they're all in, unless, of course, they nominate someone else to be their employer. Then they wouldn't be in either.
A good way to look at it is actually look at the employee nomination form, because the employee signing off that they are effectively eligible. So if you look at the nomination form, there's lots of stuff in there that.
Yeah, and it's the responsibility of the employee to get that right. So they're liable if they do it twice for 2 different employers. I mean, obviously you have to tell them that, this is the rules, but sometimes people don't listen.
Okay, the next is this Richard clarifying. Remember, Richard sent that what came from the NDIA earlier in relation to the prepayment. So he said it's the first advance payment, and most payments from the NDIA come after the service, and then so this is the first advance one, and then there's also no GST in the health service. It counts as income.
So you don't account it for it as a GST-free supplies, but you say count it as income in BAS. So you do count it as a GST-free supply. Okay, so you must do that. Okay, so there's no GST in health services because it's normally classified as GST-free. Okay, so that I just wanted to point that out because there's no indication that. So when you ask the question about is an advanced NDIS payment, and I had that question, we're trying to work that out before, so I'm glad you answered it for us. And that was one of the thinking, that it wasn't included as even a taxable supply. But thanks for the clarification. So that means that effectively it's sitting in your BAS, it's GST free, but what the NDIA has confirmed is that you don't include it in your projections, or you don't include it when you receive it, which, yeah, is good news.
Right, everyone, I'm going to close down the Q&A session now. You've been fantastic panels in terms of you answered 36 questions. Look, there are still a few questions that I've noticed in the chat room, and I have a number of questions that were sent to us prior to the webinar. So what I'll do with the panelists is I will speak to them. The ones that we've covered will be good. If there's ones that we haven't covered, we'll come back to you on those. So Tanya, can you go to the next slide for me, please? Mariana, did you want to, while we've still got a number of participants in, go through how we can assist them? Thank you.
Yeah, thank you. So look, we are assisting clients if they want to know a little bit more, if they want us to help them go through the journey of enrolling, preparing, reviewing their aggregated turnover. I mean, that's probably not so much of an issue for not-for-profits. That means it's under 1 billion. Prepare review calculations for GST modified turnover forecasts, which is important, the forecast, because you still have to show it every month. So it's good to have the forecasts. We are saying that for the NFP community, we'll reduce our rates to $3.50 an hour. And so we provide that service. Assist with ascertaining employee eligibility. And again, the requirement is there. Now, I have been answering questions that have been emailed to me, and I normally let people know if there's much more work to be done, that, you know, I charge them a rate for it, and before I start, and they can let me know whether they want us to help or not. So I'm trying to be as open and transparent as possible, but at the same time helpful. So thank you everyone for having us today.
We're just running the poll at the moment,
Oh,
Mariana.
right, okay, great.
So we'll just let the poll run just for a moment, because we've still got a number of participants in.
And Kim, while they're all doing that, can you send me that thing on the NDIA that
I will.
Mark and Richard posted?
Yep. And there's numerous comments from Mark and
Oh yeah,
Richard.
no, I'm having a read now. Thank you.
Yeah, in the chat room, so I can send those to you as well.
Yep, and I suppose just following up on this offer, if you do need assistance and you are likely to qualify for the March, then obviously time is of the essence, and there's quite a bit of information that we'll probably need to look at. So get onto it pretty quickly.
Look, I'll just let that poll run through, so it gives all of the participants the opportunity to complete it. But I would absolutely love to thank our panelists today, and all our participants. I hope you're finding our weekly seminars informative. We are really trying our best to keep you as up to date as possible. I mean, obviously this is unprecedented times. In terms of our webinar today, it has been recorded, and we will be providing you with the recordings plus the slides. And as Mariana mentioned, there are 2 grants that are available, and I will have all of those, or they'll have those 2 posted up on the ENFP community during the course of today. One thing, in terms of next week, we actually have the salary survey pro bono launch. Now, obviously we would normally do that in our boardroom. We would have 100 people. We would have lots of chatter and great food, but we'll be doing that virtually. So I will be sending that invitation out on Friday for everyone. So that will go out to you. I'm just checking in the chat room because someone else has come through. Nope, that's fine. Right,
Francis just asked a few questions, but I'll just call Francis separately.
Yes, thank you so much. All right, to everyone, I hope you stay well, stay healthy, and thank you again so much for joining our webinar this morning. Thank you.